So we've had some time to think about what Tito Mboweni delivered in Parliament, well, virtually to Parliament earlier on, and I think everybody has got their key takeaways in what the minister attempted to do. So I quote this one. I liked it. I think a lot of people are also going to be repeating this one. So my first words are the mouth of the hippopotamus. Now, this is the minister speaking. The direct quote is, "It is eating our children's inheritance. We need to stop it now." If that wasn't dramatic for anyone, I don't know what will be. But is anyone listening? Here's the minister again. 21 cents in every round of tax that's raised. In other words, the money that's raised from you and I and the businesses that are resident in this country, 21 cents, a fifth of that money goes to paying debt. That is stark. Let me share with you some of the main ugly numbers here that I picked up. So, we're talking about a budget deficit of 15.7%. In other words, 300 billion rand short in the current fiscal year. If you exclude the UIF payments, we're talking 14.6%. Call it 15%. It's all the same, right? Yes, correct, I say. So here's the other number. The budget total debt of government to GDP ratio, at the moment, we're sitting at 81.8%. 81.8%. Let that sink. That's a jump from 65.6% that was presented in the February budget. And we're talking about the government initially having to borrow $7 billion. There are many other scary numbers in this budget. And let me get more competent minds to join me in analyzing the budget that we have just seen. Okay, let me introduce them. Kobie van Antwerpen, Head of Public Sector and Financial Management Service at BDO. Thank you for joining us, Kobie. Ian Scott is Head of Fixed Income at Momentum Investments, and David French, Tax Consulting Director at Mazars. Gentlemen, lady, thank you. I'll begin with the lady. Kobie, I want your initial thoughts in terms of the key takeaways for you, and I also want to know if you are happier now than you were before the minister began speaking.
Thank you, Godfrey, and thank you for having me. I'm actually a bit more worried based on the debt circumstances that has been explained in which our country is finding itself. And as a former public servant, it is such a huge responsibility that you have to now make sure that the funding that is spent in an appropriate manner. If we look at the GDP, it is a concern. If we look at the two areas that the minister is saying we will be really focused on in terms of the changed budget, emergency budget, which is 50% almost going through to our public servants, and then a massive spend on infrastructure. It is exciting, but there's a lot of responsibility and accountability that's currently sent to our way as private sector to support the public sector, but our country is in trouble. And as he said, there's a narrow path that we are on, and we need to make the gate. I think that's critical.
Absolutely. We need to make the gate, but if you are driving a hippo, you may struggle to make that gate. Let's go to Ian. Ian, your thoughts, your observations.
I think the bond markets were probably already primed for a bad budget number. That's why we've probably seen post-budget that the rand didn't make a huge reaction. In fact, we saw 10-year bonds probably fall about 15 basis points already, and what we call the yield curve started to flatten. So I think it's quite important to understand that bad numbers were probably already priced into the market over the last week or so. I think it's quite important to understand that the borrowing requirement would go up, so the weekly bond auctions probably go up about 1.5 to 2 billion rand. I think the markets can sustain that. I think what is much more important for the bond market is the cost containment part into the budget. But as always, it's about implementation. I think what's quite important here is that South Africa doesn't have an income problem. It's got a spending problem. It's spending long-term borrowing money on current expenditure, and it needs to cut that expenditure. And I think the second important part of the budget that we're seeing is the zero-based budgeting. We've seen zero-based budgeting work well in large corporates across the globe. So why won't it work for governments? I think that it makes sense. And we really have to cut the spending side of the budget, not just worry about the income side, because it's not an income problem, it's the expenditure problem that we have at the budget, and that needs to be addressed.
Yeah. Two quick questions for you, Ian. From your perspective, was the picture stark enough in terms of the terrible choices that the government and the people of South Africa have before them? And secondly, was the market disappointed with that $7 billion that's going to come from overseas?
I think the market is not that disappointed. As I said, we've seen the bond yields fall, which means the prices went up. I think the one good thing about the whole government finance situation is that we actually have very low offshore borrowings as an EM. So we have the ability to borrow in dollar and euro markets to push up that offshore borrowing. The other good thing is that obviously rates in those markets are at generational or all-time lows. So maybe, a bit of luck with all the bad news is that we can actually go and borrow dollars at very cheap rates in the world, because as we know that the US Fed rate is sitting at 25 basis points. The European rates are basically at negative rates. So we can access those markets at very cheap rates. I think it's quite important. What do we do with those dollars and euros that we actually borrow? That's important for the market. We can't go and borrow dollars and euros to pay people grants and salaries. We actually need to spend it on infrastructure. We need to spend it on the right things in the economy.
Absolutely. David, if I can bring you in. So I saw, you tell me what you saw that was important for you and the points that you make about it, but I did see the minister proposing 40 billion rand over the next 2 years, over the next 4 years, and the details of that coming in the medium budget, the MBT, what do you call that one? The one that comes in October, the medium-term budget policy statement. Yeah. Give me a sense of what you saw as key things, but I was frightening by that one.
Yes, I look at it a little bit differently to everyone else. On the spending side, I don't like to see the spending on pure expenditure, as we call it, but I was looking, and my NBPTS, isn't it? Worries come in not so much as the 40 billion, but in a couple of little statements that are hidden away, not in the speech, but in chapter 4 of the documentation. My quotes aren't as dramatic as yours for the general public, but certainly for me, they worry me. It goes, tax increases are necessary to stabilize debt. And the second part of that is personal income taxes should be augmented by higher effective tax rates. And then he goes on to say, we'll hear a bit more about all of this in the medium-term statement and in the budget next year. So we're going out to borrow, and we might have some borrowing capacity. We know we have to repay it. We have to repay the interest on it. How are we going to do that? Nothing was said in the speech at all. Let's call it the really public document.
Yeah.
We still wait to see how do we fund this.
Yeah.
And that's I agree that our spending can't be on expenditure that just goes away. If we're going to be committing to the infrastructure program, then we must be spending on something that is going to grow our economy, and that we can get more taxes out. Because quite frankly, I don't see how the minister is going to extract more out of the personal income taxes. We're already there.
So the suggestion has been put there. We know income tax increases are coming, and they may well come before this economy has started to recover. Yes, there's going to be some growth next year, but that's a bounce of a low base. If I can just get quickly your view, David, Ian, am I confusing my names? Yes, I am, David, before we go to Kobe. If I can quickly get your view in terms of the quantum of those potential tax increases, and then we also get Kobe's view.
I haven't seen Oh yeah, I do. The active scenario assumes increases of 5 billion in 2021, 10 in 22, 10 in 23, and 15 in 24-25. So it's not going to fill the holes that we're seeing. What are we looking at? Something 300 million rand, 300 billion short in this year, but it's certainly a fair whack on the man in the street.
Kobe?
I agree with the statements made by our esteemed panelists. I do believe the key issue would be, as we stated, how the money that we borrow is spent. We know that some of our big construction companies have delisted and are in process of delisting on the JSE due to the amount of money that's just not available to sustain, or how the spending happens. And it brings us back to the zero budget effect that Minister has pronounced upon as soon as 1 July. And I think the key issue is there is some magic in zero budgeting. It tells you that every rand has a purpose, and every rand has a category in which it must be spent. And if our government can truly budget according to that, with what they know is their commitments that's already there, and seeing how we can turn around this zero rate budget into an effective manner in spending whatever is borrowed, spending whatever is there as revenue, we will see change in how things are done. But this cannot be done without taking into consideration how we procure these services and infrastructure related projects, and how it's then implemented. I think for the past 20, 25 years, we have never had an issue of having sufficient capital to invest in infrastructure, but it was how the infrastructure money was spent, and it's now catching up. And now we're in a borrowing state where our own funds could have been invested in our own infrastructure.
Yeah. One of the things that caught my attention was the paragraph, or a couple of paragraphs that were devoted to the unions, and, well, indirectly to the unions, but the civil servants. Half of the money that government collects is going to, of all revenue is going to paying civil servants. And then the minister says, well, he kicked the can down the road, didn't he? He said Minister Mkunu will be taking care of that. And then he said we wish him well. Kobe, you deal with the public policy at BDO. Did you get a sense that the minister still thinks he's going to be successful in being able to save the 160 billion rand that he promised us in February he would be doing over the next 3 years?
It's quite a tough question. Thanks, Godfrey. Look, the realities are, in terms of what needs to be done, and in terms of unions being on board, it's a very difficult and complex situation that we do have. I mean, we also saw in recent newspapers that approximately 19 million rand of our tax fees are being spent on public sector officials that's not at the office, that's been suspended, and matters have not been concluded over the past 2 to 3, 4 years. And I think that's a key issue. So if we're losing 19 million per annum on that, how do we then claw back on this 160 million promise? I am skeptical about the ability to achieve that if the workforce also do not come to the table and agree upon how to deal with the salary bill. Another issue that one needs to take into cognizance is your state-owned enterprises and the amount of salaries that goes there, because some of our state-owned enterprises and public entities are very much funded by government, by national departments and provincial departments. And there's a lot of spending that occurs there on the wage bill that doesn't affect the services that needs to be rendered in an appropriate manner. So I am skeptical, but one needs to be optimistic in terms of the current position that we are in, but it's going to be tough.
Yeah. Ian, from the markets, the bond side of it, did you get any sense that the minister realizes he's approaching a ceiling in terms of the amount of money that you'll be able to borrow out of our deep liquid markets?
Well, I think that view is quite clear from National Treasury and from the SARB, and the deep liquid bond market is maybe not always deep as liquid as it was. Otherwise, we wouldn't have seen the SAR being a net buyer of South African government bonds to the tune of about 30 billion over the last 2 months. In fact, it had to come into the bond market and supply liquidity. That would be strike one. Strike two would be the steepness of our yield curve. So that means the difference between short rates and long rates in South Africa. Now, typically in the rest of the world, there's not a big difference between long rates and short rates. In South Africa, I think we're seeing our curve basically at all-time highs in terms of steepness, where you see that the short-end bonds are sitting, let's say, around 4%, and your 2048 government stock is probably sitting at 11.5%. So, I mean, that's 7.5% steepness. That says to you that, the bond market is concerned around the fiscal outlook, and it also affects the cost of capital or the cost of borrowing for the government. It means that if government wants to borrow long, it's going to pay a massive premium for the fiscal indiscipline that we've had over the last 10 years or more. So the bond market is pricing for that risk. So yes, I think the minister clearly understands that the bond market is basically asking a premium for the fiscal indiscipline of the past. And what we've seen over the past few months in government bond auctions is that government actually issues what we call in the middle of the curve, anywhere from bonds maturing in 2026 all the way out, let's say not much longer than 2035. So it's trying to avoid issuing in that very long, expensive end of the yield curve. So I think National Treasury clearly understands that there's a risk premium there, and it needs to be addressed.
Can I get your thoughts, Ian, before I go to David, on this zero-based budgeting that the minister is proposing as a principle? And then secondly, your sense as a player within the market of his ability to be able to get through this on the political side of things?
Well, I think from a market's point of view, it would be a great thing if we can start working to say that every extra rand you have has to have a play. There's not just a doubling up or a percentage increase on last year's number. We actually have to start from rand 1 and see if the cost makes sense and spend those rands. Now, I can't make a political call. It's not my arena. We don't understand politics, but we know that implementation is a lot harder than putting it in a policy document. So I think the jury is still out in that one. If the Minister of Finance and National Treasury can actually implement this, but if they can, it would be great for the bond market, because that would mean that curve would flatten, that cost curve would flatten, because the bond market would then have faith that the Minister and National Treasury can actually implement the zero-based budgeting. But it's up to them now, and the bond market sits and waits for the Minister of Finance and National Treasury to actually implement this. And once we see it happen in national government and in SOEs, I think it will take the cost of capital for government and SOEs to borrow in the local domestic market down by a long way. But we are waiting.
David, it's the same question to you.
I can only support moving to this, because I do believe that we've probably been, with respect to the people at Treasury, a little lackadaisical in budgeting, and over the past. I think it will help us to focus our minds on how exactly we should be both collecting and spending the money. I've said at various times over the last couple of years, come budget time, I'm really concerned about the models that are being used, because we see this forecast of growth all the time that we're not achieving. So if we start from scratch and start building up, it can only be a better thing. Of course, yeah, as has been said, implementation is absolutely crucial.
Yeah.
And we need to see that if the minister in his very excited tweet earlier in the year said he'd been given permission to do structural reform, I'm glad for him and his excitement, but can the rest of government commit to that as well? That's what we hope for.
Absolutely. And for me, one of the more exciting things was the fact that this idea around zero-based budgeting, he threw it around during the lockdown. And then he has now come and committed it in the budget. And also, he also committed to pushing through the reform measures that he formulated earlier this year. And we know there was political opposition to some of them, but now they have come back and they're now part of the record of history in the national budget. Do you think he can do it, David? Do you think he'll be able to take that hurdle and mount it and jump over the next to the next side?
I believe he's going to take a very big stab at it. I think he's probably got the backing, or he believes he has the backing to do it.
Yeah.
Whether he's successful or not, I mean, it's politics. I can never try and predict that.
You can't predict politics, no question about it. Kobe, can I get your closing thoughts in terms of perhaps, I don't know whether you noticed anything that was missing out of the minister's budget. Did he miss a step that perhaps he could have used this crisis to try and fix?
I do believe he missed the actual plan. It was a very broad-based discussion this afternoon. Zero budgeting, how it will be applied. If we look at the key areas again, how will we get our unions optimistic about possible non-increases in salaries? We saw already in June and in May this year where salaries were not being adjusted as expected. There were strikes and unhappiness. So it is a very progressive move that he has made, and I think all support to the minister in terms of that. Talking about your zero-based budget, but the area that I do believe we missed was the actual how. It is taxes, and I'm not as an expert in taxes, but how will it be applied? How will we adequately apply the borrowings? And I do think a lot of our compatriots, if I may call them as such, are very worried at this point in time about the pronouncement on debt. All of us now truly understand how deep we are in debt, but there wasn't a very clear path of how will we get out of it in the short term. There's long-term plans, but we also need a short-term impact at this point in time, with the worst of COVID probably still ahead for us in this fiscal year. Thank you, Godfrey.
Ian, people speak of using a crisis well. Did he miss a step, do you think? What is your view in terms of perhaps what the minister could have done under the cloak and shield of this crisis?
Yeah, it's never waste a good crisis, and we are in the midst of one. I think with the limited amount of levers that he could pull, he probably did the right things. He probably signaled the right signals to the bond market. I think what would be more interesting and probably better for markets, and I know it's a no-go zone, is probably to talk around the IMF and how a long-term assistance policy could help South Africa. Yes, it comes with conditionalities, but yes, if a long-term IMF bailout plan could be negotiated, I think it would be good for the cost of capital, and the IMF bailout would be good for the South African taxpayer. Because I think those conditionalities of the IMF would address a lot of the concerns around current spending. So maybe that was the one trick in my mind that he missed, is not talking about having the medium to long-term IMF facility there to support us.
What I found interesting was that that $7 billion that he spoke about, that he says he's going to borrow, we know he can borrow $4.2 billion from the IMF, and the New Development Bank has promised $1 billion. And I was wondering about where the other roughly $2 billion is going to be coming from. Did you get any sense of where that could potentially be coming from?
No, it's a little bit not clear on details, but we would expect that they would probably tap the European and the US bond markets. Luckily for us, we know that there's a hunt for yield in the world, and that developed market investors are looking for higher yields, real returns. And fortunately, in South Africa, we do have real returns. We actually have very high yields compared to other emerging markets, and especially developed markets. So I think the ability of South Africa to tap those global markets are pretty good at this point in time. So I presume we will do a dollar or a euro-based deal.
Absolutely. David, your thoughts on the same question as well. Anything missing, glaringly, that the minister could have slipped in here?
I don't have much to add. I think it's been covered. I would have liked to have seen a bit more detail about what sort of we don't want to call it bailout, but support we can get from institutions, rather than just a comment about the borrowing in general. And yeah, again, it's I might have wanted to see a little bit more detail, but maybe it's too short notice on how we intend to collect more through taxes. Some projection on that. They put in two very nice looking graphs with the what did they call it? The active and passive scenarios on it, but they all look very good, and they tell us we're going to follow the active scenario and go up to about 87% borrowings against GDP, and then it's going to drop off. There's that bit of me that would have liked to have seen a bit more behind that. I don't quite believe it just yet.
David French is Tax Consulting Director at Mazars. Is going to be staying with us, as well as Ian Scott, Head of Fixed Income at Momentum Investments, and Kobe van Antwerpen, Head of Public Sector and Financial Management Service at BDO SA.